Today I want to share with you a lesson on price action. I've had a bad trade this week, what I consider to be a trade where I didn't really follow my plan too much because I didn't see something properly in the market. I want to share with you the results of that because I believe that in sharing mistakes, I can learn better myself and you can learn from my mistake, which is of course a good thing. So I'm going to kind of go through the theory first because it's really important. And then we'll go through the trade and I'll show you how to avoid these mistakes by using a very simple price action. This is going to be one of my biggest lessons for price action that I want you to be aware of. So let's dive right in. All right, so I want to give you a bit of context first before we go in because it's really important to understand these things to, I believe, trade better. So, very big level here. We have different kinds of market conditions. We have what we call sideways market, where price is going within the range. We have trending conditions where price is going up and up and up and up with the trend. These are different conditions. Now, when price is going within the range, up and down, up and down, up and down, this is the kind of time where you want to look for two kinds of trades: reversals of these resistance and support, or you can look for breakout when price finally hits the top of a range or the bottom of the range and breaks out. This would be the breakout here. These are the only trades you should be looking for. You don't want to trade pullbacks within the range. You don't want to necessarily buy here, or you don't want to necessarily sell when price is here, because we have no clue of knowing where price will go exactly. It could go back up, could go back down, but we don't know that. So very crucial to know what to do here. Okay, so only sell at the top, buy at the bottom, or trade the breakout. When price is trending, we have more flexibility, right? We can enter on pullbacks. We can, of course, we had the breakout here of a range probably, where price was in the range before. And then we kind of break out of that. Then we continue here. And then price goes up and up and up from there. So we can have the trend line. We can have many things here. We can trade pullbacks. If you buy here, even at the top, it's not too bad because you have more room to go. If you buy here, we're in a good place. You have a lot of room to go. If you buy here, price will pull back a little bit, go back up. We have room to go. So understand where you can trade and what that means for you in the kind of market you trade. But that's the context here first, okay, before we go to the charts. So here's what that's about. I took a trade last week on GBP/USD. That was a losing trade. Now that was caused partly because of the news, but I don't believe in news too much because I can have plenty of trades that the news make me win because of a big reaction. So I still trade in the news no matter what. I still take the same strategy. When I back this, I back this in the news. When I trade live, I trade with the news. It doesn't matter to me because I know that price could either go in my favor or not. It's about 50-50 in that case. But here we got a trade on GBP/USD. That was what I considered to be a losing trade. Now, if I move this over here and we just pay attention to what the price does in that kind of condition, we had over here in the past a sideways market. Price was having the same highs, only one low, but we had some place here to look for similar highs and a breakout. We had the breakout happening over here. Price went up in a trend and did a small pullback. And from there, we kind of kept going in the trend. Now, me looking at this, when we don't see what's happening again after, this could look like a very simple trend, right? It could look like price was making this trend over here and price was pulling back, then to go even beyond that trend, right? So that looks like this, unless you know how to read price action, and then it looks different. So my trade was a bit fast. I entered the trade really quickly. I didn't really pay attention too much to the price action in that case, but look at how that evolves. Okay, so if I just go here, and I'm going to go through here, and we'll look at price action by ourselves. Okay, so we are at the top here. Looks like price is going to go beyond because this is just a pullback within the trend we have. And we have this candlestick here, which shows some indecision. So that doesn't mean much. But then we have this one here, more indecision. Okay, these are very small candlesticks. They're not really triggering. They don't have big sign. We're going to go back down. They are just small kind of price action signals. Now here it looks like we have a trade to go back up. It looks like we have a good momentum to the upside, more strong, but more indecision after that's coming. More indecision again, down and down. And now you have this big push here, which sounds like a good plan to go up. But look how all this here is sort of making a range market. Could be a small range on a lower time frame, right over here. But look at how this is a really indecision in the market. We have price hitting it top, coming back to retest here, hitting it top, coming back here to a pullback, and then trying to go back up, but we failed to go near the high. And then trying to go back up, but we failed to break that high before, right? We're not really in a trending market anymore. And that's what I failed to notice in my trade that I entered a bit too fast. We have price going up, bullish candlesticks, and decision candlestick, bullish again, more indecision with these wicks, these small dojis here, coming back down. Then you have this push. So does it make sense to enter here based on a break of that range, or based on actually a reversal within the direction of that trend, a pullback? Well, the answer is no, and that's why I'm making this video here, because I entered on that trade right over here when he had a bit of a push above this candlestick here. I took that trade, went to a bit of profit, came back down with the news, and of course, you guys stepped out on this after. So the point is here. Now, understand when to trade. I think you have the right conditions in this to trade. If you're trading a pullback, you can definitely enter more aggressive. If you're trading in a sideways market, you don't want to enter. Now, the condition we had in this market was closer to this one right here, was closer to a small sideways indecision market, not closer to this one for sure. Because this one, to have this, we need to have our higher highs, higher lows. Sometimes we can have something like this. We can have price going up, tight range, making a deeper pullback, then continuing from there, right? But instead of what we had in that kind of market that I've just showed you, instead of this one here, is we had price going over here, making very small pullbacks, making a deeper pullback, but then failing here to go beyond and kind of staying like this. Right, that shows that we're not going to go and break this high. We're probably going to go back down instead. And being aware of that is going to make a big difference in your own trading. So look to read price action. Look to see, are we really having candlesticks that are showing us we're going within the trend, going up? These candlesticks here that will show us we're going up. Are we having these candlesticks that are more based on indecision, where we have a lot of wicks, we have up and down, we have a lot of these where price is like very in a small kind of configuration like this. Sometimes we're even bearish here. And that just shows us that we have not very much momentum to go up, and we must stay away from the trade in that case. So hope that was useful. Hope you got some value out of this, out of how I took a bad trade, how you can stay out of it next time, how you can read price action better. Let me know if you have any questions in the comment section below. I know some people are going to comment, oh, you could do this and that. You could look at smart money concepts. You can look at these things. But these are all trends. They're all things that are going to come and go with time. And I like price action better because it's not the new shiny thing. It's something that works and something that I've used for a long time. And something that I know works really well. Not the new method that someone invented recently. So hope that was useful. Let me know in the comment section below if you have any questions on this, any thoughts. And I'll catch you back here in the next video pretty soon. Ciao.